Hey everyone, how's it going? It's 1 o'clock Pacific time on December 8th. We're closing out the first full week that we had of trading in December, last month of the year. And basically, so far, we've gone nowhere during the week. Let's take a look at what happened today, and then we can take a look on how we closed the week out. So today we talked about how I didn't really expect the market to go anywhere, mostly chopping, continuing the chop. The interesting thing is that chop happened in the upper portion, not even one half, like one third of this entire range that we talked about, the previous low and then the high up here. And we did react off those levels, but we continue to trade higher, but we never got a lot of momentum. We never got large volume bars. We never got anything of real significance above this line. And so we're basically just petering out right at this line. So that means continue chop sideways. But what's really interesting is that if we're ending the week like this, barring any crazy news over the weekend, if we start opening near here, then now it becomes a lot more likely that we start moving upwards. So when we look in the SPY, we're right here, right at this purple line. But if we start out there next week, then there is a lot better chance that we can start moving up and breaking out over here. So with the QQQ bouncing, that is a nice good bounce right there. You can see that we came down, touched that EMA 20, and then we started moving up. We got a series of higher highs and higher lows throughout the entire week. And so this QQQ on the very short term is moving higher, moving up towards this first blue resistance right here. And as it does that, it is going to start to have an influence on the S&P 500 as long as it's not counteracted by the sectors not included in the QQQ, or as long as those other sectors remain flat or relatively flat, or if they even go up, then that's going to allow the S&P to move up as well. So we have the first signs that this consolidation may be coming to an end and that we could get a chance to start creeping higher. Did that bar just change? Because it was right at the purple line earlier, right? Or am I going nuts? It looks like we're a little bit above that purple line now. So maybe I didn't look carefully enough, or in the zoomed out position, it looked a lot closer to the purple line. I'm not sure, but we are a little bit above that purple line. Remember, these are regions, not exact lines, so that's still within this region. And the same with the day trading action. This is a region, not an exact blue line, so we are within this region of where we drew this blue line. And in any case, we're right at a significant level, and that means it could possibly break out and move upwards over the weekend. Now, that said, we could break down as well. There's always the possibility of that, and there's increased risk over the weekend. And we've been up for so long that there's this built up sentiment that there should be a pullback. Of course, the market likes to do the opposite, or at least temporarily do the opposite of what everyone expects. That way, those who lack conviction get washed out by the institutional traders who have tons of conviction and tons of money to back up their conviction. So we'll see which way it goes. If it pulls back, then goes up, or if it just goes up from here. Let's take a look at our VIX. Our VIX is way low again. Okay. And then what would be interesting to see if any of those VIX options that we saw, that whole bunch of options that were out in January, let's see if that big pocket, especially the out of money options, if we still have a large, yes, we still have a very huge open interest right here. So there's still a large expectation at the very least by institutional traders, because retail traders don't have this kind of money, but that our VIX is going to probably spike over the next month or so, or at the very least, we're hedging a lot of our portfolios by taking these VIX calls out here. So for example, I'm currently hedging my portfolios using VIX calls rather than puts on the indices or any other strategy. For the bang for the buck and as much coverage as you get versus the risk in these options, this is a really great place to grab some cheap calls that will hedge your portfolio. So there could be some other institutional traders who are thinking the same thing as me, and that's why there's a huge amount here. But normally this is speculation. There's quite a bit of speculation. So that's still in play. And if we look at our CPC, I don't really like looking at it over here, but our CPC, that's not right. CPC. There we go. Total put call ratio. Today we're at 0.93, so no real signal, nothing to learn from the CPC. We'll take a look at what bonds did today. They pulled back, like we were saying. We were saying that they were going to open closer to the EMA 8. Looks like we traded all the way to the EMA 8 and then came back a little bit. This is looking like it's, remember, this is not a mean reverting asset, actually. So these moving averages aren't as meaningful. So, but it does still kind of trade technically. What we really want to see is that this overall, this larger trend that I drew a few days ago, where we have this large basic trend, we're coming up to here, almost now we're starting to pull back. If we get 1 or 2 more days downward like this, then that will be enough for a trending asset for confirmation that this was a down, a pullback, and then we would start resuming downward motion again, which would put pressure on the equity markets, especially the NASDAQ. And then after we get a pullback, another deeper pullback, we can move up from there. So what we're looking at right now is a move up to most likely to this blue bar. We could go a little bit further to the green, the sea green over here, but then a pullback and then a bounce after that pullback. We'll see. We'll see how well that develops. Right now, we can only speculate. We can't say with any sort of certainty that that's going to be, but I would say there's a higher chance of that than any other movement or any other pattern. So I might put that at 50-ish%, and then all the other possible ways that it can move all together, accumulated together, would also occupy 50%. So this is the most likely move, but it's still not the majority, or it's still not super high conviction. Okay. Is there anything else for us to look at? We're at the end of the week. We're closing out, so just very super flat towards the upper range of this channel. And so we can expect one of two things. So so I just talked about a 50% chance of us staying within, of moving up to this, maybe breaking up out of it and then pulling back. Over the next week, this would still fit that same pattern because that would likely take a couple of weeks. But in the next 1 week, you can see that we might rise up to this blue line right here, this thicker blue line that I drew, and then pull back. We might continue in this channel back and forth. And so if we go up, once we hit that blue line, we would expect a pullback down to the blue line or the EMA 20. That would be another pullback, just another mild pullback. And then we could bounce from there as well. So that fits within the same pattern. It's just that their timeframes overlap a little bit. So we'll see how it develops next week. But for the most part, we took risk off the table, hopefully, during the market session, because we don't know exactly what might happen over the weekend. It's better to take our weaker positions off the table or our riskier positions off the table or somehow hedge them. So hopefully you had a chance to do that during the market today. Overall, it does look like that we are going to continue, the more likely scenarios that we continue upwards, at least for a little bit. So on Monday, assuming everything still looks the same, we'll start to look to put capital to work, not a whole lot of capital, but at least the stuff that we took off today, then whatever allocation we had from that we got back, we can put back on Monday. Okay, so that's it for this week. Very choppy sideways movement throughout the markets. And like I said before, if this continues through next week, then we can probably expect the same for the rest of the month. So over here in this channel right here on the S&P, why isn't, okay, so over here, or even right here where that EMA 20 is, I was a little more conservative, so I'll just draw the second one, put it right there at the EMA 20. And if we stay within this range all through next week, chances are we're going to stay through that range through the rest of the year as well, or at least up until we get to pretty close to the end of the year. So we'll just keep that in mind when we're going into new positions. We're just going to keep them very light and very nimble. We would prefer strategies that hold things over a couple of days, like 2, 3, 4 trading days, rather than ones that go longer. So right now is not really the time for swing trading. Unless you see a breakout or significant pullback, we really want to avoid really long swing trades. We only want to look for high probability, short, tiny swing trades over a few trading sessions in this current market environment. Okay, so that's it for today. Have a wonderful weekend, you guys, and I will see you on Monday morning.